Hi, I'm Ashleigh from SoCo Realty, and today I am here with Kristian from Asset Reports. And I emailed him yesterday because I was about to do a little video for you all, and I didn't know the answers for tax depreciation, which is what we specialise in, and they do all our clients' reports for us. So thank you, Kristian, for being here.
Yeah, thanks, Ash. Thanks.
So a few of the questions that I've got, and I've got a bit of a list, is can you give me a quick summary of what a tax depreciation report is?
So it's a report which calculates the loss in construction value of your property, which you can claim as a tax deduction. So it's not don't panic everybody, it's not the loss in value of your property, it's actually the loss in construction. So once the construction or renovation's complete, that actually starts losing value and you can claim that as a loss in your everyday tax return.
Excellent. And what sort of percentage of people are getting these done and who's missing out on it?
It's probably easier saying who's missing out, Ash. We still probably see about 80% of investors not actually utilising a schedule and not claiming everything that they're entitled to. So, look, there's people claiming bits and pieces through their accountant and what have you. But the reality is the average person misses out on probably about $3,500 worth of deductions each year because they don't utilise a schedule. So.
Yeah, that's crazy. I mean, we as an office, we always contact our clients and remind them about tax depreciation, but I think they just get it as like an email and then they don't actually really understand like the reason behind it. So that brings me to one of my questions, which is, can an accountant or an owner do it themselves? And
well, legally they can't estimate construction costs for tax purposes. Back in 1997, the ATO sort of put a crosser over that and said only registered quantity surveying companies who are registered with the Tax Practitioners Board and with the AIQS, which is the Australian Institute of Quantity Surveying, can estimate those construction costs. But you can do it if you've got a receipt or something like that. But if what people miss out on is things like external paving, carpet window treatments, different types of flooring, maybe extensions, pergolas, pools, pool pumps, all those sorts of things. There's 480 things in a residential property that you can claim. So not every residential property is going to have every single one of them, but there is a lot of money to be claimed. And I guess the main thing is to get a report. The report lasts you for 40 years anyway. So it'll last you for as long as you own the property.
Yeah, I couldn't remember if it was 20 years or 40 years. That was one of the things I got stumped on yesterday when I was thinking. So that's really good. So that was one of my questions, how long it lasted for. Can you backdate? So for my clients who haven't had one before, and they go, yeah, let's get one before tax time, can they, I think there's a number of years you could backdate?
Yeah, so depending on how the ATO sees you, if they see you as a complex taxpayer, your accountant may be able to squeeze 4 years out. But if you're just a simple taxpayer, which 99% of us are, you can actually recoup up to 2 years worth of missed deductions. So that can be recouped straight away. You don't have to wait until the end of financial year to lodge that.
Oh, okay.
So you can lodge it straight away. You can do it via MyGov. You can do it via your accountant. But that money, if you are going to be credited back some money, will come back to you within 7 days. So if you've got 2 years to claim now and you're going to claim this year as well, if you can get your schedule done in the next month or so, you might be able to get 3 years worth of deductions in the next month. So that'll be some bonus cash, which people, especially in this current climate, I'm gathering people need a lot more money with what's been going on. So
absolutely, yeah, no, that's really good. What is the importance of getting it done in a strata company? Because, like, if you've got a property that's a strata, a lot of properties these days, they think, oh, you can depreciate your building, but they fail to think that you're in a strata. Can you still do it?
Yeah, of course. So your unit entitlement, as per on your strata scheme, you can claim that percentage of the whole common area. So if you're looking at, your high-rise developments, that includes pools, gym equipment, elevators, basements, basement pumps, fire services. So yeah, so a 2x2. So if we talk brand new properties, a 2x2 apartment would generate more deductions than a 4x2 house. So because of that common area. So, if you can claim the the pool, the furniture around the pool, the furniture in the foyers, or even if it's just a common driveway and gate motors, etc. Yeah, if you're in a strata complex, you can have a crack at all of the common area there. So.
Yeah, I think that was the biggest that I had with regards to doing the tax depreciation was the people just think, oh, it's your tapware, it's your curtains, your paintwork, and they don't actually think outside. Yeah. So, because I think you can do plants as well, can't you?
Plants, no, because soft landscaping you can't claim. So if you're talking lawn, etc., you might be able to squeeze that. So if you get technical, you might be able to squeeze that stuff when you're as a claim when you are beautifying your property ready for tenancy or in between tenancies. But the reality is soft landscaping, no. Hard landscaping, yes. So retaining walls and paving, etc. So
excellent. So you. I've got a rental property and they've had a tax depreciation done on a couple of years ago, but now the owners have gone and renovated the kitchen or the bathroom. What can they do to incorporate that into your report?
Yeah, so we update our reports for free once every financial year. So anything you've added and removed from the property, just shoot us an email or give us a call and we'll update that schedule for free. If they're going to do a whole extension or something like that, we'll need to jump back out on site. But as long as you've got the paperwork and send us through a few photos, we just want to make sure, I guess, everything that you can possibly claim each year is in that schedule. And then we'll let you know whether or not some things that you think you can claim, actually you can claim under maintenance and repairs as well. So there's a bit of a fine line with what goes in the schedule and what you can claim directly with your accountant. So.
Yeah, so because there's a difference between obviously the depreciation and then the automatic tax deduction.